Well, happy Monday. It is Independence Day week as we enter July and want to bring you the latest data here in the Austin metro area. We're going to start looking at trends. This is May, but it's also looking backwards for the past 5 years, show you how the market is shaping up. We're going to share current inventory levels and sales levels. We're also going to look at the gap between original list price and closed list price. And finally, we're going to wrap up with mortgage rates and some tips for buyers and sellers. So let's start looking at the trends. This is looking at the total MLS area. So this is a 5-county area for Austin. The orange line is 2024. And as you can see, if we go through May, the only year where we had fewer sales was, of course, right after COVID was announced, this dip on the green line there. The rest of it, you can see the pandemic obviously had hotter sales. We're below last year by about 500 homes per month in terms of sales. It's closing a little bit, but that shows you number of sales. Sales volumes, just if you added up the total dollar amount, again, lower for the metro area. Here's median sales price. So I find this chart really interesting. So obviously this is 2022 at the top. This is 2020 at the bottom. And so we started COVID way down here, just over 300,000. We rocketed up over 2 years to 550, almost doubled the market in price. Of course, it collapsed as soon as interest rates went up. But look at the last 3 years right here. Our median price is almost identical to where it was in 2021, which was 460. Last year was 463, and this year's 456. We're all within about 10 grand on the median sales price for the metro. So I don't want to call that stability necessarily, but it's definitely a level that the market says with higher interest rates, we can sustain. So something to keep an eye on. Here's average sales price. Again, very tight there. Total listings. This is where we're seeing the market expand with inventory. The orange line, of course, is total listings, and I'll show you more detail on that in a second. But of course, during the pandemic, we had nothing for sale because we had so much demand. Then as the market cooled off because of the higher rates and pumping out new supply, all the home builders, all the apartment builders, and this doesn't even include new apartment complexes, but just to give you an idea, a lot of it just ended up flooding the market with a lot of inventory. That's what we're seeing now. So total listings are the ones that have not gone under contract, So that's what we're looking at here. Months of inventory, same thing. We're probably sitting about 5 months. This is May, but now we're peaking. We're over here in July. We're probably sitting about 5 months of inventory total in the marketplace, higher than we've had the past 2 years. This is Williamson County to the north, a very similar story, lower number of sales, lower sales volume, but look at the median price. I mean, really tight with where we were 2021, 2023, and 2024. Average sales price, again, right there in the middle. Total listings climbing. You can see the year when interest rates went up, just how much that inventory spiked. Kind of softened a little bit last year because, again, Williamson County is less expensive than Travis County, and it has a ton of cities and new construction. So it's growing, but we are seeing listings build up there, months of inventory there. This is Travis County. So this includes not only most or all of Austin, but you've got markets to the east and west, Lakeway, Lago Vista on the west side, Bee Cave. You've also got Manor and those communities on the east side, Del Valley. So again, number of home sales lower, sales volume lower, median sales price a little bit higher. But still right in line with what we saw those 3 years. Average sales price a little higher as well. But again, total listings still in the spring, rocketing up as we have those sellers coming to market, but fewer buyers buying those properties and months of inventory climbing. This is Hays County to the south, and the story is a little different. So pay attention. Number of home sales much higher than we saw the past several years. Sales volume peaking in Hays County. Median sales price a little bit lower than last year. So what does that tell you? Lots of sales and a lower median sales price. They are selling a lot of lower inventory price-wise in the market. Average sales price, again, a little bit higher than we saw the last 2 years. Total listings still climbing in Hays County and months of inventory still climbing. But the real interesting part of that is the fact that they do have higher sales and higher volume of sales. They are selling lots of homes in that, high twos and mid 300,000 price point, which is really affordable for folks, really booming down there in Hays County. All right, we're going to switch over here and we're going to look at, this is original price versus sold price for the past 2 years. This is going back to the very beginning of 2022. This is when rates went up right here. And you can see the list price really coming down hard on that green line. But we get to the spring of 2023. And again, some optimism came into the market. Typically, you have what we call the spring market, and that bounced up in list price. We also saw it lag a little bit, but it did come back up in the sales price as well. But of course, rates went up last year. We see the price come back down in the fall. And here we are in 2024, where this line starts right here. We can see we've had a spring rise in median sales price, but also by the time we got to April, rates kind of bounced back up into the mid sevens, and we've had to see those list prices fall to get more buyer attention. In other words, as the inventory goes up, you're just naturally going to have more price reductions because more sellers have to compete for the same number of buyers, and that's driving the market down a little bit. I'm going to come over here. This is current to this morning, although I would kind of ignore the July line because it's just way too early to know where it's going to end up. But as we look at the past 12 or 13 months of active versus sold listings, the green are active listings. So this is looking at how many homes do we have on the market. This is just single family, but we peaked out last year below, maybe 11,500. So far this year, we've peaked out at 13,300. So almost 2,000 more homes for sale at the same time than we had at any point last year. And yet, if we look at sales, it's a little bit higher than last year, but not much. This is where closed sales, buyer sales. So if we're trending about 3,100, we got that in May. June's a little early. I think this week we'll see more and more agents. They have to manually go into the MLS, tell them that they closed, tell them what the price is. So we'll see that blue line climb for June. But again, if we're only selling, call it 3,000 homes a month, but we have 13,000 on the market, that means about 80% of listings are not going to sell on any given month. So I think what we're going to start to see now is we're really going to be watching, of course, interest rates, but we're going to be watching too, are sellers that aren't selling going to pivot? Are they going to start taking their homes off the market? Are they going to throw more of them in the rental market? We're seeing some of that too. Or are we going to get a little bit of buyer demand if rates can start to come down? We'll watch that. I think that's going to be telling. So if I come back here, we're going to look at rates. So this is as of this morning. Rates really didn't do a whole lot last week. There was some economic data that came out and kept them propped up above 7%. But we'll be watching that. Again, I don't think it's going to move that much. We've been really sticky at this 7% mark. If you have good credit and you are a primary home buyer, you are going to have a rate in the sixes. So just know that you're not paying 7. This is kind of the blended average of the market. And of course, if you are willing to go to like a 15-year fixed, or you're buying FHA or VA, again, you can already see those rates are a little bit lower. But again, primary home buyers, you're going to be in the sixes. If you're an investor, you're going to be in the sevens. So typically, if I'm working with investors, I'm running numbers around 7.5% if they're buying an investment property. But anyways, that is looking at rates. If you are a seller right now, we're probably at peak inventory. So I have a feeling that, last year it kept going and kind of peaked out more in September, but I think that's because the rates really took off later in the year last year. This year, I think we already kind of think rates are just either going to be flat or maybe they'll soften a tiny bit. But I think we're starting to peak out on inventory now. So if you're prepping to sell later this year, we're going to be watching that and see what happens there. If you're currently on the market, obviously, we've got to be the best thing that buyers can be. And we have to have it in a way that gets their attention purely on how good we look and where your price sits in terms of what they're looking at to get offers in the market. If you're a buyer right now, you're probably going to have, again, more inventory to look at than buyers have had in 15 years. So this is probably the time. If you're looking for the right property, you're probably not going to have a better time to see the amount of inventory that we have on the market than right now. And again, if you can get a rate in the sixes, it's really not that bad compared to where we've been the last 18 months, where most of the time those rates were in the sevens, and last fall we even touched 8%. So yes, rates aren't going to be at 5 or 4, but I don't expect that for a while. So I would think if you can lock in a rate somewhere in the sixes, that could be where we're going to balance out in this market. Anyways, I hope this was helpful. If you want to follow all of our videos, make sure to check out our YouTube channel at Ryan Kelly Group. You can see these each and every week. Click that subscribe button. You'll get them automatically. And of course, if you know someone looking to buy, sell, or invest in Austin, we would love the opportunity to talk with them. and tell them more about the market and their opportunities in detail. Anyways, I hope you have a great July 4th this week, and we will talk to you next week, next Monday. Thanks.